morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, as well as Managing Director of International Content, Emily Parker. Thank you, two, for joining and zooming in this morning. How are you doing?
I think it's not exactly Zoom, it's this other thing, but yeah, we're good.
Teleporting from the virtual world.
Teleporting, yeah.
We'll make an NFT of you one day. All right. Trade blocks indexes are now the CoinDesk indexes. So checking in on Bitcoin, the CoinDesk Bitcoin price for XBX index is currently trading at 55,366. Bitcoin is slightly down, just about 1% over the past 24 hours. And the CoinDesk Ether price ETX index is trading right now at 2363. But Ether is shooting up this morning, almost at 8% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And looking at our top stories. So, Lawrence, we're seeing a pullback, well, a slight pullback for Bitcoin. It's not really doing much this morning. Ethers, though, is jumping. What's going on?
Yeah. Well, again, we're still seeing a lot of value locked in DeFi, which, of course, it's not entirely explaining the Ether story, but it's a key part of it. It's something like $55 billion of total value locked in Ether. That's down, though, from $62 billion a few days ago. And, one thing that, of course, that we have to make a mention to is Doge. I'm sorry, Emily. Doge is down. It's down about 20% in the past 24 hours. Yeah, I know. But it's proof that memes come with a risk. If you're buying it because you saw something cute on the internet that might work for, let's say, Amazon or Etsy, not quite for crypto. So, use all caution.
Doge
please.
Day was a Doge bust. Emily, I'm sorry. But PayPal's making moves as well. We're hearing a lot of M&A talk in this space. What's going on there?
Yeah, just a bunch of interesting news items from the past couple of days. Venmo adding Bitcoin and crypto payments. So that's really interesting, buying and selling. And then we have reports that Mike Novogratz's Galaxy Digital is in talks to buy crypto custodian BitGo, which apparently was in talks with PayPal earlier. That deal did not go through. But the larger story here is that we're probably going to see a lot more M&A action in the cryptocurrency space.
Interesting. All right. In other news, former top U.S. commodities regulator Giancarlo is joining the board of directors at BlockFi, a crypto bank. He is one of a couple of former high-profile U.S. regulators being recruited by crypto companies. And joining us now to discuss is the former chair of the CFTC, Giancarlo. Welcome, Chris, and congratulations on the new role at BlockFi. We learned former comptroller of the currency, Brian Brooks, also will become CEO of Binance US yesterday. So on the one hand, some might question the revolving door between regulators and crypto firms. People in crypto strongly believe in its decentralized ethos. But on the other hand, your presence in the crypto bank builds a bridge between the crypto space and policymakers. So is this a good thing? How do you view that dynamic and your role in the big picture?
Yeah, I'm so glad you asked that. I spent 35 years in the private sector before I was invited by the Obama administration to become a regulator. It wasn't something I sought out, but I was honored to serve my country, and I very much enjoyed spending 5 years at the lead U.S. derivatives and commodities regulator. But I in no way said I would not go back to the private sector, where I spent most of my career and where I think I've got a value proposition to offer in terms of my experience. I took a company public before I went into government. I understand financial capital markets, and I'm really having a ball being back in the private sector. So,
of all the crypto firms
I earned my
out there,
corporate stripes long before I went into government.
Of all the crypto firms out there, why did you decide to join the board of BlockFi, and what problems do you hope to solve?
Well, actually, it's not. It's growth. It's the spectacular, enormous growth, and I experienced that myself when I helped build GFI Group as one of the first electronic platforms for trading over-the-counter swaps a decade ago, and we had growth, but not like this kind of growth. This is quite extraordinary. The internet is a remarkable social and technological phenomenon, and it's by no means seen its course. It's what it's done to first to information and then to retail and to transportation. It's now doing in financial services, as we all know, and in a very broad way. And the type of clientele that BlockFi is building, a clientele that absolutely is fascinated by digital assets in a range of areas that needs servicing by trusted service providers that can help them.
Did they approach you, or did you approach them?
Approached me. Zach and Flory, terrific team there. I was really impressed with the quality. I am impressed with the quality of management and the quality of the board, and it's a great company.
Hey, Chris, BlockFi is still very small. You know, they're down in Jersey City. I was talking to the gang earlier before the show. I actually know where their offices are because I used to have a desk right there. It's kind of like a shared office space. It's still a very small company. So when they called you and said, "Hey, we want you to join us," what were they hoping that you bring to the table? What were they looking for you to do?
Well, I'm actually surprised you'd say that, because that's kind of an analog way of thinking about businesses, right? The size of their office, their footprint, kind of very terrestrial view. What it's really about is the future. And when I look at companies, I look at a number of things. I look at, the vision, the quality of management, the positioning. I think they're extraordinarily well positioned because the traditional service providers, the financial service providers, haven't really come into the space. And so I think they've got an enormous opportunity. But they're servicing a demographic that the big banks and the big financial institutions just don't get. I mean, my father banked with Merrill Lynch, and I inherited that relationship. But with great respect to an outfit like that, they don't understand this new generation's needs for services with their digital assets. And I think that BlockFi and a few other players in the space are providing a service for a generation that's going to come very valuable in the future. And I think they're taking advantage of that now.
Are they looking to go public? You mentioned you had worked before and taken companies public. So is that something that they're looking to do? Speaking of old finance.
Yeah, that's something I really would be inappropriate to comment on publicly, but stay tuned. It's a very exciting, very dynamic company.
Good morning. Just to zoom out for a moment here, we are seeing a lot of former government officials joining crypto companies. And I think part of the larger narrative here is that people are really nervous about U.S. regulations, and they're nervous about how to navigate the new U.S. regulations, and they're nervous about a U.S. regulatory crackdown. And we saw rumors, a few days ago about an anti-money laundering actions that may or may not have caused an impact on Bitcoin's price. I guess my question for you is, is there a real risk of a U.S. regulatory crackdown on the cryptocurrency space? And what are these actual risks? Because you hear a lot of rumors. Like, what are the actual risks that are coming from the regulatory side?
Yeah. So there's no question that the U.S. regulatory framework needs a great deal more clarity. And I'm very pleased with legislation that just passed in the last 24 hours through the House Financial Services Committee under Ranking Member Patrick McHenry and Stephen Lynch, to ask the CFTC and the SEC to take the crypto task force that I began along with Jay Clayton when I was there and regularize it and put it on a proper regular footing and come back to Congress to make recommendations for more consistent, comprehensive regulation. I think it's going to serve in that capacity. I think it will come back. And I do think that within the next 2 years, we may see a more comprehensive regulatory structure for crypto in the United States, and I think that would be a good thing. And I think Gary Gensler, who's very advanced and is thinking about this, and who has said publicly that he believes that crypto needs to come into the regulatory envelope, I think is the words he used in an interview. I think that is consistent with a broader program, and I think in the long term, if that regulatory envelope is done properly and thoughtfully, I think that can be a good thing. There should be appropriate consumer retail protections built in, as there is in securities laws, as there is with commodities laws at the CFTC. However, and this is, I think, the answer to your question that you're looking for, I don't see when you say crackdown, I don't see a suppression movement to come out of the government toward crypto. That would go counter to the whole notion of a free society and a free market economy that has made the United States the envy of the world in terms of economic progress. I don't anticipate, quote unquote, a crackdown, but I am optimistic that a sensible, logical regulatory framework that is predictable will come into place. Maybe something that replaces the 1946 Howey test as the be-all and end-all as to what is under the SEC's jurisdiction, what is under CFTC's jurisdiction. Replacing that with some clear rules of the road, I think, would be very much in everybody's interest.
Thank you. And you've also done a lot of great work on the digital dollar and advancing a digital dollar. And last time you were on the show, we talked about China's central bank digital currency. Since then, there have been reports that some people in the Biden administration have become more concerned about China's moves. And I'm wondering if you've seen anything to that effect, and if there has been momentum gained on creating a digital dollar since you were last here.
So there is a lot of concern about the development and imminent arrival on the world stage of a digital yuan. I know there's concern in law enforcement and intelligence communities about this here in the United States and elsewhere. And then there's, of course, economic competitiveness as well. And we see now Europe and certainly the Bank of England are accelerating their experimentation. There's some very good work being done here in the United States out of the Bank of Boston, the Federal Reserve Bank of Boston, and MIT. But that's actually, although it's very deep, it's also relatively focused on infrastructure and architecture. What's missing in the U.S. is a sandbox where the private sector and the public sector could explore some of the policy implications, policy challenges, and policy opportunities of a U.S. central bank digital currency. And I'll make you a promise. If you'll give me an opportunity to come back on your show within the next month, I'll talk a little bit about where I think a sandbox is going to happen in the United States very soon.
Absolutely. Absolutely.
Fantastic. Chris, thank you so much for joining us this morning. Congratulations on the new role. Looking forward to what you accomplish on BlockFi.
Thank you very much. Great to be with you once again. I look forward to being with you again soon.
Yep. That was Chris Giancarlo, former chair of the CFTC and now board member at BlockFi. Coming up, Shapeshift CEO Eric Voorhees on the markets. Welcome back. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, April 21st, 2021. I'm Angie Lau. Let's get you up to speed from Asia to the world. Blockchain and fintech groups in 6 Asia-Pacific countries signed a memorandum to work closer together to advance blockchain innovation. That's across the ASEAN 5 countries, Singapore, Indonesia, Malaysia, the Philippines, Thailand, plus 1. Australia. They're calling themselves the ASEAN Blockchain Consortium, and here's why it matters to the global conversation. Institutions are starting to take note of blockchain. Forecast News spoke with Chia Hock Lai of the Blockchain Association of Singapore, who hope with this collaboration that we may see more coordination from regulators in this region, and that means potentially a more frictionless ecosystem.
We want to organize this ASEAN level kind of conference to share the best practices, experience and knowledge in the respective development of the blockchain space.
ASEAN 5+1 is ripe for that kind of coordinated expertise, but it also shows nations in this region are making a bigger play in blockchain, including training up local workforce and talent in digital asset compliance, reskill workers in things like blockchain analytics and compliance that are in demand right now. For example, Indonesia is hoping to improve its data management. Imagine the massive headache to track tax records of 250 million people spread out over 17,000 islands. Blockchain can create efficiencies and streamline. Over in Malaysia, that nation wants energy companies to declare how their electricity is generated on a distributed ledger, giving consumers more choice and transparency. While in the Philippines, home to the third highest population of users of crypto in the world, its government also tinkering with distributing government bonds through blockchain apps. And in Thailand, the nation wants to track down where and how its oil gets sold with blockchain. And it's also exploring blockchain for its court system and aims to upload all their judicial information to a blockchain platform later this year. And finally, over in Australia, well, its government is funding blockchain ideas that help track the supply chain of its mineral industry, all working together to figure out how blockchain is integrated in this region.
And what we see right now is a very strong migration from all these institutions, from private blockchain network to global blockchain networks such as Ethereum. And you don't build anymore blockchains for your domestic market only, but you look beyond the borders. And this is what this ASEAN momentum is all about.
All right, let's take a look at how the Asia Day in Crypto wrapped up at 4 o'clock local Hong Kong time. Spot prices on Bitcoin topped out at the $55,000 mark. That's a 2% increase from the same time yesterday. Now, in other cryptocurrency, Binance Coin saw a 20% growth over the past 24 hours. XRP and Cardano also surged. Dogecoin, though, dashed many people's hopes it could reach the $1 mark. It never got there. It hit 41 cents at its highest level and has been on a downward slide since. Equity markets in Asia slumped today as rising COVID-19 cases in Asia worsened the economic outlook. And big news from PayPal in China, even though they were quite quiet about it. Without much fanfare, PayPal announced the launch of a new domestic digital wallet in China during the Boao Forum in Asia. They kept mum on the details, but CEO in China, Hannah Tu, says it will focus on cross-border payments for goods and services, but it won't compete with domestic digital platforms like Alipay and WeChat. And that's the Daily Forecast. I'm Angie Lau. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at 55,474. Bitcoin is down about 0.9% over the past 24 hours, and the CoinDesk's Ether price ETX index is trading right now at 2366, but ETH is zooming up over 8% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And joining us now to discuss the crypto markets is Shapeshift CEO Eric Voorhees in Denver, Colorado. Thanks for joining us, Eric. So Bitcoin is taking a step back, Doge rallying, over the past couple of days, but now it's kind of also pulling back due to, with no fundamentals. Where are we in the crypto market cycle at this point of time, Eric?
I like to think of them as, seasons. And I would say at this point, we are in the late spring of the cycle. So I expect quite a bit of movement in these prices, over the coming 6 to 12 months. And it's just been very, very cool to see Bitcoin hanging out over $55,000. That's quite an achievement. Dogecoin, I have no idea what's going on there. That's just nuts.
We just always ask. All right, Shapeshift is changing its business model. You've announced that, to DeFi to avoid KYC obligations. You're supporting Thorchain. That's your latest announcement. So, which allows crypto-to-crypto trading without middlemen. Correct? Maybe you can go over and explain to us in really simple terms how Thorchain works and how it's different from all the other DeFi projects out there.
Yeah, so first you have to excuse the silly name because I think a lot of people dismiss it on its name, but it's actually quite a profound new technology. So back in January, Shapeshift announced that we were integrating DEXs so that our users could trade directly with these protocols instead of with Shapeshift. This allows us to no longer be an intermediary. And that was fun and exciting, but it had a big asterisk, which was that it only worked for Ethereum and ERC20 markets because all the DEXs were built on Ethereum. There was no way, for example, to trade Bitcoin for Ethereum. So we've, in the background, been working on an integration of Thorchain, which launched last week. So Thorchain itself launched last week, and we launched our integration last week on Tuesday. And what this allows is essentially someone to move between different chains in a decentralized way for the first time. So you can think of it as a Uniswap type model where there are pools of capital that other users have deposited, and anyone who is trading trades against those pools of capital. And so now, using Shapeshift, you can actually trade from native unwrapped Ethereum to native unwrapped Bitcoin. I believe Shapeshift's the first company to have ever done such a thing, and we have been able to do it because of the integration of Thorchain.
So, wow. Eric, with the unwrapped swap, so can you kind of break down how that happens and what it means, let's say, for the average trader, retail trader? How should they look at this?
Yeah, I mean, for anyone who watches these markets, the reason that this is important is that not only now can you move between native Bitcoin and Ethereum, but other chains will interact with Thorchain as well. And soon, well, actually already, you can trade Tether to Bitcoin. Tether Bitcoin is the world's largest crypto market currency pair by far. That has always had to go through centralized institutions. 99.999% of that goes through central custodians for the most important market in crypto. Now that Thorchain is here, that market some portion of it can move to a decentralized, borderless, immutable standard. So from the perspective of moving this industry forward and realizing the goal of immutability and decentralization, this is a massive step.
Yeah, it boggles my mind how you were able to accomplish this. I mean, there's so many moving variables to consider. For example, like what happens when Bitcoin and Ether transaction costs rise? How does that affect the swaps there on the chain?
Yes, so these are relatively expensive transactions from a mining fee perspective. So it does not make sense for a $5 trade or a $10 trade, but a $10,000 trade or a $100,000 trade, the fees are actually far lower than you get with a centralized entity. So any central exchange that's charging 10, 20 basis points at $10,000 or up, that starts to be higher on a centralized exchange than it would be paying the mining fees. So I expect that Thorchain will generally be used for larger orders, not for the average $5 trade.
Yeah, and it's fascinating that you've really stuck to the decentralization ethos and the whole independence that a lot of people in Bitcoin in the community really praise. Do you, in your opinion, do you feel that centralized exchanges like Coinbase have sold out, going public, getting cozy with the banking system?
No, I don't think they've sold out. I think they play a really important role in the industry. Part of the decentralization of Bitcoin, of crypto itself, is that you have all these different companies using all these different models to grow, ranging from essentially what are banks, right? Coinbase is pretty much like a bank at this point, and is now a publicly traded company, to completely anonymous, open source, decentralized protocols, and no one quite knows who built it, right? And everything in between. I think all of that is really important. If it was all the former, if it's all just a bunch of banks, then crypto hasn't really changed anything important at all. If it's all the latter, if it's all a bunch of anonymous open source protocols, then the status quo financial institutions are going to be much more hesitant to interact with it. Politicians are going to be much more wary that it's a good thing. So I think that diversified approach is really key. I'm super proud of what Coinbase has accomplished. I think that's a milestone for the industry, and really excited to see that.
So just to follow up on that, we talked last time about KYC, and you have written about how you don't want Shapeshift to use KYC. So following up on Christine's question, you had actually indicated that you thought the use of KYC was sometimes unethical, in the types of information that was being gathered. And it would seem that an exchange like Coinbase would fit into that category because they are gathering a lot of information about users in a centralized way. They'll ask you for a photo of your driver's license, for example. So, just on a more philosophical level, do you consider that to be unethical?
Yeah, I always view KYC to be unethical because you're essentially forcing innocent people to surrender personal private details that they don't want to surrender, and they are not even being accused of wrongdoing or a crime. So I think it turns the concept of justice on its head when you start suspecting innocent people without even an accusation of crime, let alone a conviction. And to endanger them by taking their personal private information under that regime, I think is always unethical. Now, Coinbase is not doing it because they want to do it. Coinbase is doing it because they're forced by the government to do it because they are a financial intermediary. So I don't fault Coinbase for having to do that. I wish they didn't have to, but the fault there purely lies with the politicians who are mandating and coercing such a policy.
Eric, would that also hold if the company decides to do that on its own? If they voluntarily said, "Look, we want to know our customers before we allow them to do business on our platform," would that still be counted as unethical if it's voluntary and without government interference?
Yeah, good question. Any voluntary exchange between consenting adults, I don't find unethical. So if a company wants to ask for private information from customers of their own volition, and the customer is willing to provide it to that company, there's nothing necessarily wrong with that. But that's not what's happening in KYC. It's not a voluntary decision of the company to do that. It's forced on them by the financial regulations because they're a financial intermediary.
One more question about the market and just crypto ETFs. You know, that's something that people are talking about. Do you think that's necessary?
I remember in the last market cycle in early 2017, everyone was very eager for the SEC to approve the ETF, the Bitcoin ETF. And the decision came down that it was being denied again. The market crashed by 10 or 20% for a couple of days or a week. And yeah, we were all bummed that didn't happen. Fast forward 4 years to today, I don't even know that it matters anymore. Bitcoin is far bigger than a Bitcoin ETF at this point. The SEC has just given up the opportunity for the U.S. Financial system to lead in this regard, but Bitcoin does not wait for anyone's approval. Bitcoin does not ask anyone's permission. It grows because it provides utility to people. And so at this point, I don't know that it matters that much. Certainly, it would be better if that was permitted for consenting adults in a free society to be able to buy shares of an ETF. There are certainly ETFs that are far more speculative and dangerous than a Bitcoin ETF would be. So it is very strange that the SEC has not approved it. But at this point, I don't even know that it would be that newsworthy anymore.
All right. Eric, I love having you on the show. Thanks for joining us this morning. Really looking forward to seeing what happens with Thorchain. Good luck.
Thanks, guys.
All right, that was Shapeshift CEO Eric Voorhees. Coming up, how Europe's biggest telecom is taking a further dive into blockchain, and checking in with CoinDesk's very own Nick Day for our policy and regulation update.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Deutsche Telekom, Europe's largest telecom by revenue, is entering the blockchain biz, purchasing a significant amount of tokens native to Celo, a decentralized payments network on your cell phone. Celo token is popping about 12% over the past 24 hours on the news. Joining us now to discuss is Celo Co-founder Rene Reinsberg. Welcome, Rene.
It's great to be here. Thanks for having me.
Great to have you. So, Rene, explain to me the significance of this new partnership. How will Celo and Deutsche Telekom work together going forward?
Yeah, so look, I think for me, this is a really exciting, news, not just for Celo, but also for the broader ecosystem. We've seen earlier this year companies like Tesla and Square start putting Bitcoin on their balance sheet, but we have yet to see companies, putting governance utility tokens on the balance sheet in protocols that they're looking to use, right? And I think that's going to be a trend that we'll see really play out over the next few years. And it's exciting to see a company of the size of Deutsche Telekom be the first to announce such a step.
How will it impact people using the Celo and Deutsche Telekom services? Are you working with Deutsche Telekom in any regard?
Yes, so Deutsche Telekom, is a global telco. It owns T-Mobile here in the US, for example, and obviously has a massive footprint, over 240 million customers. And so the insight into what customers need and want, particularly as it comes to financial services, is obviously huge. And for Celo, Celo is more than just one company, right? It's a community of companies. There's 130 organizations that are part of the Celo Alliance for Prosperity, which Deutsche Telekom is joining as the first mobile carrier, and that are already using digital assets for a variety of use cases, such as delivering COVID aid, helping people, get better access to loans through DeFi, and so when I think about Deutsche Telekom as a mobile carrier, I see some exciting opportunities because Celo is also the only blockchain that actually works on just a mobile phone. It also works on computers, obviously, but when we think about 6 billion smartphone subscribers around the world, they currently don't have a way to actually transact and in digital assets directly in a trustless way with blockchain currently.
So Deutsche Telekom has said, they're looking forward to working with Celo because every phone number is linked to the wallet of a customer. But how are you managing, privacy concerns and that people's data is, secure?
Yes, and this is actually an area where Deutsche Telekom is already supporting the Celo network. So there is a service as part of the protocol that maps in a fully decentralized way phone numbers to public keys. And that means that if someone wants to send a payment to someone else anywhere in the world, all they need is that person's phone number. So no longer you have to kind of request someone's public key, which also means that no longer does the recipient have to already have a blockchain address, but you can simply send a payment to a phone number, and then the recipient can verify themselves through that decentralized phone verification protocol and claim the payment. And that is done in a very secure way. And so, I think in some ways, there's concerns always with phone numbers around spoofing and, people getting access to systems. But here, I think just to be clear, the core architecture of blockchain in terms of the public and private key architecture is not really altered, right? The phone number simply serves as a proxy to simplify the user experience for sending and receiving funds.
Rene, former Citigroup chairman Dick Parsons just joined your group, just joined the board. You obviously you just announced the Deutsche Telekom deal. Those are some pretty heavy hitters. What's your long-term goal here as a company?
Yeah, so the mission for Celo really is to create a better financial system that can create the conditions for prosperity for everyone. And so Celo as an open blockchain, similar to Ethereum, takes a very long-term view here. And, we're already seeing hundreds of companies building on top of the network. Dick Parsons joining the board of the Celo Foundation, I think, is a really great signal also to the community that we're building for the long term here. We're not looking to just quickly launch something, and I think this is really. When I look around the kind of our community, we actually have our community all hands starting today, Koneko, which is an Esperanto word, means togetherness. And across sort of 2 days, today and tomorrow, we'll hear from many of the entrepreneurs building on Celo, and we'll probably have thousands of people attend. And it's really a testament for this community and sort of the strong pursuit of this mission and this alignment, the passion for it. And it really takes more than a company to achieve that. And it does take open architecture and open infrastructure, right? So that you can easily plug into also the existing financial system, right? So for example, in a country like Kenya, where mobile money is, is obviously very popular and more than 90% of the population use M-Pesa, there's several companies already working on enabling on and off ramps between M-Pesa and Celo dollars, which is the stable coin on the network. And, it's things like that really make the system actually work in the real world for real people. And so with this week's news around Deutsche Telekom joining the alliance, but then also the launch of the second native stablecoin to the protocol Celo Euros, I think we're seeing kind of a big step forward towards enabling many more of these real world use cases. And so that's really exciting.
Do you think that DeFi or just decentralized projects in general need the cooperation of some of these bigger, more established financial players in order to go mainstream?
I think it's just a question of time until every major corporation is holding tokens and is participating in these open networks. Similar to how all of our current internet companies are built on sort of the internet stack, right? I think here this is the value stack, right? And so I think it's just a matter of time. We're still very early in this journey, but even if you kind of look at kind of more traditional financial use cases, like, FX spot markets, FX futures and derivative markets, and you look at the complexities around, for example, settlement. So I started my career at Morgan Stanley, so I worked in fixed income capital markets. And, the hard thing is not to kind of say yes to a trade, but it's everything that happens after two parties agree on a trade, right? And so you look at the benefits that blockchain can bring here, and particularly when thinking about DeFi, when thinking about a small company that's looking to manage, for example, FX risk, with sort of the rise of stable coins, particularly, in different currencies, you suddenly have a much easier way of actually, tapping into these solutions, which, previously would have required you calling up a banker and getting a quote. And, it's probably not going to be a great quote. And, then you have to kind of work through the process of actually getting the money and all of that. And so I think there's just the simplicity that people today already experience when sending a wire in a stable coin versus like sort of filling out a form, right? That is coming to the bigger financial system. And that's where DeFi is really going to help.
Rene, can you say how much Deutsche Telekom bought of Celo?
Look, it's their news, and they shared that it's a significant amount. They're going to run a validator, and so I think that's also going to be public soon, sort of on the network and the various tools. But we're excited, yeah.
Okay, Rene, thanks for joining us this morning, and good luck with the developments on your network.
Thank you so much for having me. Thanks.
That was Celo Co-founder Rene Reinsberg. And time to check in with CoinDesk Global Policy Regulation Managing Editor, Nick Day. Nick, how are you?
Hey, good morning. I'm good. How are you?
All right. So the U.S. House passing a bill to require financial regulators to set up a digital assets working group. What is that all about?
Yeah, so back in March, House Financial Services Committee ranking member Patrick McHenry introduced a bill called the Eliminating Barriers to Financial Innovation Act. Basically, the idea is the SEC, the CFTC, and some interested third parties, both from industry and from academia, would come together and basically create a report assessing how cryptocurrencies and digital assets are treated under law in the U.S. and who should have jurisdiction over what. So this has apparently passed the House yesterday in a floor vote. That's a good first step. I think, the next question is, will this get taken up in the Senate and how will it go from there? But it is definitely a very solid first step to potentially, passing this bill, which would hopefully create some more clarity around, the regulatory regime for digital assets.
Nick, some of the more progressive members of the House are, let's say, hostile to crypto, and what have you. How did they receive this?
So I didn't see the vote itself, and there hasn't been any vote breakdown published yet. I'm not sure it's fair to say that progressive members of the House are necessarily anti-crypto. There are certainly some folks on the Democrat side that are not wild about it. But if we're talking about specifically the progressive wing, Representative Ro Khanna, was tweeting about Bitcoin and how he thought it should be used more or seen more just a few weeks ago. So I think it's harder to put like a proper partisan breakdown on this. It's more kind of whatever the divides are, they're not necessarily just based on the politics alone.
Hey, Nick, any updates from the Gary Gensler front?
Yeah, so yesterday the U.S. Senate confirmed Gary Gensler to be chairman of the Securities and Exchange Commission. This is the second time in 2 weeks that that's happened, but this time it was for the term going from 2021 to 2026. Last week they confirmed him for the rest of the term that ends in June this year. He has also begun naming his staff. He's got a policy director who comes from the AFL-CIO, and a director of legislative and intergovernmental affairs that comes from the House Financial Services Committee. So he's starting to build up his staff.
All right. Finally. I feel like we've been talking about this forever and it finally happened. Thank you so much, Nick, for joining us.
Thank you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now to check in with Crypto Twitter with our tweet of the day. This one from Playboy, playmate turned photographer Jessica Vaughn, tweeting, "I'll never sell my Bitcoin because I bought in to venture down the path of developing a world that guards individual liberties at a time sovereignty is on life support. I didn't buy to store wealth. I bought to break away from a disempowering system of Fed manipulation." Well said. All right, that's it for First Mover. Coming up tomorrow is special guest Steve Kurz, partner at Galaxy Digital. Thank you, Emily Parker, as well as Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coin Toss is coming up next at 10:30, followed by The Hash at noon. You're watching CoinDesk TV.